This is Justin AMZN for Wednesday, August 29th, 2018. We're looking at the pre-market, which is gapping up. We were just talking about it on yesterday's video. That gap up would be trapping everybody here, would be a battalion of soldiers, triggering this bullish candle on the daily, and even the pre-market level here is above the lowest this got. I mean, aside for whatever this wick thing is here with how many? I'm looking for the volume. Almost 24,000 shares. I don't know what exactly happened here, but everything else says we're trapping anybody who is shorting. We're trapping all the bears. We've put in an incredible support at about 1952, 1953, somewhere in here. Support here, a resistance here, about 1960, and another small resistance right here, about 1956. And so if we do anything to stay in this range, it's just going to build that momentum, and this thing is just going to pop, and it's just going to go. It is very unlikely with this kind of a gap that it would have, this kind of move and an S-curve dip way back down and then go. I would just expect it to hold this level because of these values, these levels that it's put in here. A support here, a resistance here, a resistance here. This thing is ready to go. I mean, it was ready to go yesterday, and it just took till today, to really get to the right level to move. So let's see how the day opens. And we get a high wave candle right in this range. And it would have been almost better had this candle been bearish, slightly bearish, but this long lower wick actually breaking down, looking like people were loading in bearish to push it lower. Very high volume, people selling, getting out if they were in, people trapped already buying back, all happening in this one candle. And the candle saying, okay, we're just gonna open and close about the same level and make it look like there's an even battle going on, even though there's not. It's really great that it actually closed right above this support that we were just talking about around 1952, 1953. The close was actually 1953 and 45 cents. So easiest way to trade this is get in with a break excuse me, with a break above and a stop below, or let it break out and pull back into this level or this level. That way you're not actually taking the breakout on an all-time high. Even though in this case, an all-time high like this, bullish gap and go, I would be very aggressive with a bullish move on this. So the very next candle breaks out. Breaks out above the 5 minute here and actually comes right back into this resistance. So it broke out, it's retesting within the same 5 minute candle. That's still a good candle to get it on. Then it breaks out here, continues up a little bit. This would have been a phenomenal place to get in on this pullback. You've pulled right back into our 1960, 1959 resistance up here. So you have a breakout, a pullback, a little bit of a pause. It's the low here is 1958 and 4 cents. The high of this candle is 1957.90. Is that the right one? Yeah, so you got this tiny gap below this candle and above this candle that it pulls back into. And the next candle, a little bit lower, and then sideways. This candle is phenomenal. Into the 21, almost comes back down into this level, and then actually closes back up above or right at this level. Sideways for 20 minutes. This is just building momentum, and it's getting ready to roar. And there's a high probability it's going to just continue racing on up to 2,000. It slowly breaks out, retests, breaks out, sideways. This is it. Just continue being bullish all day. I'm not even going to go candle by candle. This just moved up. Right up here, it made a high of 1997 and 34 cents. It stayed below that here, and it actually had a high during the day of 1998 and 69 cents, it looks like. And then after hours, it actually got above 2,000. So I'm not even going to look at any of the puts because they they just did nothing today. All of this was buy a dip candle, buy a bearish candle, and have a stop a few candles away. Everything would have worked up until, probably somewhere in here. If you bought a bearish candle like this, you really needed to wait a little bit longer for a pullback, bought down here or the stop down below the last pivot, that still would have been profitable. We actually closed above every bearish candle on the day. So all the bears are still trapped, even on the day. And then anybody who bought on a bearish candle should be up by some amount. Now, if you did options, maybe not, but on shares, it worked. If we come back into this 5-minute candle and buy anywhere in this candle or wait for a breakout and a retest, maybe get in on this candle and then this one happens, we can look at what those options did, but we'll just look at the calls. Everything just moved on up. If first we look at the 1940 call, this was the range we're in yesterday. We were talking about buying down here, and taking a run up into like 13 or something, from like 10 to 13. And then it broke back down, and it was losing value and ended up closing lower. Today's opening price was actually completely above yesterday's high. And that's your first signal with the option that this is trapping people who were shorting this option, people who had gotten out of it, whatever. Everybody is trapped on the option also. And if anybody for some reason was in one, didn't get out, and just held down into here, or got in at the close thinking, oh, it should pop, like Justin AMZN said, you should have just held on all day. And look at this. I mean, we were talking about buying this at 10 by 9 yesterday, and it's at 59.77 today, the very next day. Hopefully nobody held it like that. But this is the kind of move that this gap can do. So if we take a look at another option, maybe the 1950, that one had a wick down into the range of yesterday, and would have been a great opportunity to buy this with a really small risk to reward. A really small risk and a huge reward. If we look at the 1975, that has an even better place to get in, because you got a much smaller value here. The low here is 262, and the high from yesterday was around 405. So, I mean, anywhere in here where you're waiting for that breakout, it pulls back, you're looking to get in on this candle, it's probably something where or even this one, you're looking for like a 6 by a 5, $6 by $5. This candle, if you got it at 6, you could have been stopped out at 5 here. I didn't realize that. But after this candle comes in, I mean, it just consolidates here. It could have been getting in on any of these candles for 20 minutes, getting in 7 by 6. And that should have worked. Let's see, 7. Yeah, once you hit 7, stop at 6 would have been fine. And that went to 28. I mean, over 20 R on that kind of a move. Had you just held, getting in at 6 as stop at 5, or getting in at 7 a stop at 6, that would have been more than 20 R, just to hold that to the high and even have a retracement and then come back up here. I mean, that would have been over 20 R to just hold that all day into the close. If you just got one, I mean, there's your month and then some. So phenomenal moves. Any of these places that have pulled back, it got harder to have a good risk to reward with $100 would have been nearly impossible to do. But anytime it consolidated were the times to really look, okay, what can I do? Can I get in, aggressively on one of these moves? Did I pull into a key moving average? Did I pull a little bit farther? Like all of these, it's just riding the 5. Then it pulls back in below it. When it breaks below it, you're still so bullish. That's the time to get in on that kind of candle. You could have been getting in on this candle after it, that it actually went back higher, 1050. So let's look at the 1050 candle. So you're getting in on this candle. Maybe you got in for 1250 by 1150, something like that. I mean, that would have been really aggressive. Or you got something set up and you got in, maybe 1250 and got to stop below this one, 1250 by 1150. That would have worked. Just getting it set up and just waiting for the trade to come back to you. Or this one, this high was 1085. This low was 11. I thought it came back down into it. 1085, 11. Maybe you had a setup. If it's going to pull back into this level, pull back into 1085 with a stop at 985, something like that. That wouldn't have filled. Would have been really close. Probably a little frustrating. That wouldn't have filled. So, looking for these breakouts to pull back and retest. And the further out you get with your option, with your strike, gives you some better opportunity to have that pullback, because any pullback is just losing value. It's just puking out value because it's out of the money still. So this low was 345. The high here was 360. That's how it would have worked. Get in, set up based on these candles here. This breaks out. Okay, this is the breakout point. It got above here. Let me set up a trade 360 by 260. And that would have been, you would have basically been trading that candle, missed it on a breakout, waiting for a pullback, and it would have worked. Should have been filled at 360. What did I say, 360? Yeah, should have been filled at 360 here with a stop at 260. Then that started moving up. Immediately, you could have moved up your stop to probably 310, and then 360, and then 410, and just move it up half an hour at a time. Probably would have been getting it close to this after that happened, but already would have been up at like 460 up here when it's pulling back here, and it just continued on up. I mean, you just keep trailing up, and then at some point you're going to get stopped out. Maybe you got to trail up. Saw this large lower wick, trailed it real tight up here. I mean, if you got in at 360 and you got your stop at 1060, that's already 7R. You're almost at 10R up here. That's 7R if it pulls back and takes you out. With that wick, probably get it tighter after these candles. You're watching it like a hawk. You got your stop up here around 1110. And, after these candles, and you probably got stopped out. Nope, didn't get it here. Got stopped out in this candle. Or you just got out because it's like, okay, it's moved far enough. I'll lock in the gain and just move on or not trade anything else. And then some of these moves, these pullbacks, I mean, you could have been buying here, 9 by 8, or maybe 850. If it pulls back into this, 850, and lows here are 850, 875 by 8, 875 by 775, something like that. That moved up a couple of R. We're so close to 2000. I'm sure there's a lot of volume coming out of this option, but sometimes it's like, wow, that's way too late. Had you just bought at the open at 2000 thinking, well, I got 2 days, it's aggressive, or gone with an absolute zero, set up and said, okay, I'm going to risk $200 on this. I'm going to buy at 200 and my stop is zero. So I really don't have a stop, and I'm just going to ride this all day. And I mean, if you bought at 200 and you're watching it and it's up at like $1,000 right here, that's 4R essentially if you risk that full 200. And it's always great to make $1,000 like that. That's really cool. Or make 800 like that kind of trade. That's one that you really gotta decide. Okay, do I have my plan that I'm going to exit this day? I'm going to hold it the next day. Is there an opportunity to lock in that gain and then do something aggressive again with another 200 absolute zero tomorrow? Is that possible? Or the next day? Actually, there's 3 days. It is Thursday right now, but I'm thinking of it as there's only a day left. No, this is from Wednesday. So, you can go this far out, especially when you have such a strong gap and everything has been consolidating and it looks like it's going to get moving. If it's in your plan to increase your R for something that's going to be aggressive, that you are well aware of the movement, just put in your plan and make it happen. So, this is the S curve here, and it just went. We take a look at the daily. So we had a bullish gap and go here, bullish gap and go here. This doesn't have to stop at 2000. I'm not sure where it could, maybe 2100, 2200, 2300. But these consolidations have just been making these monster moves. Anytime this squeezes, and actually we didn't even get a squeeze this time. It just paused up here for a long time. We nearly touched the 21. Did we here? No, didn't quite touch the 21 here. We did a couple times here. Got a little bit of a squeeze here, thinking, okay, it's just gonna, we thought we were losing momentum here, then it recovered, and then it was starting to lose again, which is really odd, this kind of gap that it looks like it was losing it. So that looks like it's, people were thinking that was kind of a blow off top, it's done, but nope, still has more in it. So trapping everyone. So just like we've had some small, I'm trying to find one of those small candles that we gapped above. And let's see if we have a good one. Sorry, I'm thinking small bearish candle. There's plenty of bullish candles that we gapped above, and that, like this one, continued. This one gapped up again here, pulled back, like this. It's kind of like this. You're breaking out a little bit, you're above, and then you have another gap up, and you continue on up a couple more candles. But I'm not really seeing a good one that compares to what we got here, this kind of setup. But this is, it's been on a steady incline here since April, and now it just kicked it up. It's turning faster, moving more quickly bullish. So it does not have to slow down yet. When it does, it will. When it does, this line may have increased by so much that this line is up at 2200 by the time this has moved up to 24 and back to 22. Then it'll catch this support line. I don't have a support line drawn here. That's a bigger picture. But it would be good to go back and look at, how something like this was steadily going along. And then it moved up. Then it came back nearly to that kind of a line. And then here it started on a steeper line. And then it's maintained that steeper line. And now it's breaking out to a new steeper line. At some point, it's going to come back to, that major trend line, and that, even more major. I'm not, minor, medium, major. I don't know what the terms are. But anyway, this has been incredibly bullish. Be very careful about buying this high. Wait for the pullback that you think in your gut it needs to pull back. Wait for it. Set up the trade so that you're ready, and it'll just get you in when it gets there. And if you lose an R, it's okay. Come back and do it again. Following your plan. So hope you enjoyed the video. This is Justin AMZN. Thanks.